Alright, greetings from Wellington, New Zealand. Welcome to the online lecture, I should say, Intro to Accounting. So, before that, thank you for sending all the your homeworks to either Venus or Victoria email. I appreciate a lot. I think only few of you have submitted, but hopefully the others can submit by this week. Right, so I would probably discuss two of the three homeworks that I gave to you last 3 weeks ago. Hope you still remember. The thing is, it's very important for you to understand the concept, okay? And it should be the base for you, for the foundation on whether the questions can be relatively difficult, especially in your midterm exam. All right, so I'll be picking two of your friends' work, and we can compare that and discuss in detail after this. All right, see you around. We go on to the first question. It's about Holds this golf course. Okay, it was opened on the 1st of March. The first thing you need to see is how many transactions do you have. All right, so this is a tip that I will give to you. And usually the first three transaction is relatively easy. Okay, so we will have a look at the first transaction. March the 1st, invested $20,000 cash in business, so you probably noticed already the answer. It is cash on debit and owner's capital on credit, 20,000 US, $20,000 each. Let's go on to the next transaction. March the 3rd, purchase Rainbow Golf Land for 15,000 cash. So the thing is, if you see everything that deals with cash, all right, it should be relatively easy. All right, that it will definitely relate with cash. Okay, so the price consists of land 12,000, shed 2,000, and equipment for 1,000. The thing is that you should make a one compound entry. So if you can see the answer, all of these three transactions made into one. Land, building, equipment for 12,000, 2,000, 1,000 respectively, contra to cash. Alright, should be easy. 5th of March, paid advertising expense. You know that already. Advertising expense contra to cash for $900 each. Next one. Purchase golf disc and other equipment, 1,050 from Stevenson, payable in 30 days. Alright, so I'll just highlight this. Okay, so hang on a minute. Relatively new in using this system. Right, so payable, meaning that it's not they are not paying in cash, rather they pay in payable. So there'll be equipment on debit and account payable on credit, $1,050. 18th of March, receive 1,100 in cash. So just highlight that. So every time you read the question, you probably need to highlight the key point so that you won't be confused whether it is cash or payable and all that. Okay, so receive 1,100 in cash, golf fee, meaning that is and then the next question, the next hint is that it's a service revenue. So you just go ahead to journal to make a journal entry for service revenue. So cash debit, service revenue credit, 1,100. Okay, 19th of March, sold 150 coupons, books for $10 each. Each book contains 4 coupons that enable the holder to play one round of disc golf. Okay, now I assume that you might look at this word sold. Okay, for $10 each. Each book contains 4 coupons that enable the holder to play one round of disc golf. Okay, uh, you need to actually scrutinize or read in detail that to some extent the coupon has not been used by the golfers yet. Okay, it is actually an unearned revenue that the golfer will play maybe someday tomorrow or even the next month or on next following months. All right, so we presume that we have sold all those coupons. All right, it's like a discount coupon, but they haven't used it. Okay, for accounting, the important thing is you will have to make a journal entry whenever there is a real revenue that comes as a service. All right, at this stage the golfer hasn't used that coupon yet. Okay, so in that term it is called as an unearned service revenue. All right, so they haven't used it, they already purchased it, but they haven't used it. Okay, so cash and unearned revenue. 25th, withdrew 800 for cash. Just highlight that for personal use, so you know that already. Owner's withdrawal. Okay, I'll just use withdrawal against cash for 800. 30th of March is paid salary for 250, so you know that already. Expense against cash. Right, so paid means it relate with cash. All right, next one, paid Stevenson Company in full. You might need to relate that with purchase here. All right, so on the 10th they purchase for payable, and on the 30th they paid the amount owing to Stevenson for 250. It is actually not the exact amount. They still owe 1,050, but they only pay, oh sorry, paid Stevenson Company in full. All right, so the whole payable they paid. All right, that's correct. And the last one is received 2,700 cash. All right, so highlight cash for golf fees. All right, so cash revenue 2,700. Okay, so just be aware that something you need to read carefully, whether it is a cash, whether it is a payables, or whether the service has not been earned yet. Okay, so let's have a look. It should be balanced. I'm just going to check the amount. Oh, she's using non-numerical, but yeah, I assume that it should be in the same amount. Okay, so it's balanced already. Thank you. So let's go on to the next questions. P2-2. Okay, for P2-2A, the transaction will be more complete in that you need to journalize, you post it to ledger accounts, and you prepare trial balance. All right, so let's go to the first questions. First transaction, the April 1st, invested 20,000. All right, they should be fine. Oh, We'll take that off first. Okay, just to make it faster, all right? We know that on the 1st of April, company invested 20,000 cash in her business. Okay, so you have this 20,000 cash against owner capital. The second transaction is a bit tricky in that you need to look at whether or not the company is doing a economic event. All right, so it says that they hired a secretary receptionist at a salary of 700. I presume that if you recall that I give an example of hiring people which is not which is not an accounting transaction, so probably you might need to avoid this. So you don't need to make any journal entry for hiring people. Okay, that's what I advise to you. The next one, the April 2nd, paid office rent, you know already. So rent expense against cash. Right, so it should be okay. On the 3rd of April, purchase dental supply on account. Okay, so I highlighted purchase and account, meaning that they don't pay in cash. So there will be a supply on debit and account payable on credit, 4,000 each. Perform legal dental service. Oops, sorry. Perform dental legal service and build insurance company, right? So what it means by build is that the company or Emily Valley Dentist is creating an invoice. All right, so we have actually three types of transaction. The company build is to make invoice to customer. The customer receive invoice, then the customer pays the amount given from the invoice. All right, so billed doesn't mean that the customer has paid yet. Thus, the transaction would be account receivable on debit and service revenue on credit, 5,100 each. Okay. 11th of April, you receive 1,000 cash advance from Lea Mataruka for an implant. If you don't know, implant means tambal gigi. Okay, cash advance meaning that the company hasn't performed the service yet, but the customer already. Right, so it means that same like the first questions in P2-1A, they will treat it as an unearned revenue. So I'll just take this out. All right, so on the 11th, cash, they receive cash, but they haven't performed the revenue yet. So it is called unearned service revenue for 1,000. Receive 2,100 cash. So you know that already. The service has been performed, and they can earn that as a revenue. So cash against revenue for 2,100 each. All right. Now this transaction on the 30th of April, the company is making a salary payment for the person who has been working since the 1st of April. They paid 2,800. Okay, so it means that it goes directly to salary expense against cash for $2,800. Okay, I will explain why we should do if there is an account payable in expenses. Okay, after this, but surely for this transaction you only need to use the 30th of April instead of the 1st of April. Okay, and the last transaction paid 2,400 to Diesel, which is occurred on the 3rd of April for 2,400. So you pay cash credit and account payable on debit. Okay, so the total is 41,300 for debit and credit. I would like to explain the transaction that uses account payable for expense. Okay, the first transaction is whether the staff was hired on the 1st of April, okay, and the salary will be paid on the 30th of April. Okay, now in that case the journal entry would be normal: salaries expense against cash 2,800. Okay, so that's fixed value. Now what if we have a condition where you hire the staff, okay, you need to pay the salary, but you haven't paid until the 30th of April, okay, and instead you will pay it on the 20th of May. Okay, how do you treat the account? First off, you don't need to treat anything on the 1st of April because it is it doesn't acquired as an economic transaction. But when it comes to the 30th of April, you will have to expense the salary without any cash. So it means that you counter it as account payable. Okay, because the staff hasn't been paid yet, but the expense will be occurred on April. Right? Now by the time we pay the staff on the 20th of May, then what we should do is to offset the account payable and we pay them with cash. So you're actually offsetting the account payable, you pay the cash on the 20th, but the expense occurred on April. Alright, so I hope this makes sense. Thank you. Okay, let's go on to the next question where you need to fill in the general ledger. First off, the general ledger for cash. Okay, you have this owner's capital, which is correct. Paid off and you pay by cash as well. Receive cash for future service. Dental service. Have paid salary expense and diesel payment. Okay, if you checked the 5,100, we don't receive the cash yet, as we know that the company is only giving the invoice, so we haven't received the actual cash yet, so it doesn't put as the cash. Some of you have put 5,100 as cash, so that's totally wrong. Oops. Okay. Next one is account receivable. That's where you get the dental service for 5,100. Okay, because the customer hasn't paid yet. Supplies, you have 4,000 on the 3rd of April. Account payable, you have plenty. Here I guess you don't need to use this transaction as well as this, okay, because when you hire the people you don't put as a journal entry, so it should be dental supplies and diesel payment only. Okay, unearned revenue, that's where they receive cash advance but they haven't performed the service yet. Owner's capital, you have the investment in the first place, 210,000. Service revenue, you have two transactions on the 10th and the 20th. And you have salary expense, which is actually held on the 30th. Okay, so probably I'll just use this salary expense for 2,800, and you have the office expense rent. Okay. Trial balance, I assume that if you have put it similar, you will notice that the balance is correct, 29,800. Okay. Right, so that's all for question P2-2A. Okay, so I think those are the two questions that I was discussing in detail. I hope you understand some of the ideas. Okay, hope that helps you understand the concept of payables in particulars and cash. All right, hope to see you soon in another video, and good luck. See you later.